All right, good morning and welcome to Trader Minute. Great to have you aboard. All right, lots to look at today. Lots to talk about. Market slid into the close yesterday. The broader market saw some selling into the close. Obviously, Fed on tap here today. The Fed used to be a kind of a one-time event at 2 o'clock Eastern. They would release everything and it was done. Nowadays, they do it a little bit differently. They'll release their statement at 2 o'clock. Bernanke will run a press conference at 2:30 Eastern, and it'll kind of be an afternoon event of digestion. And we'll be on. We'll be talking about some of the movement throughout that, and some of the things that are going on. Market futures are up about 3.5 points right now. There's not a whole lot of activity. Some strength out of Europe overnight. Some decent news out of Germany. Kind of helped to push futures higher just a little bit. But really, the U.S. markets are keying in on the Fed here today. We did have some housing start data here this morning that was actually pretty good. Also, some earnings out of Lennar that were really good, the home builder, and so even in a rising interest rate environment, we're seeing some good housing, some good earnings out of the home builder. At least Lennar. We'll wait to see what some of the others have to say here. But the market, even though there's a bunch of stuff happening with individual stocks, and we'll look at it, the FedExes and the Apples and Fords and whatnot, the broader market is still just kind of on its hands in kind of a wait and see mode. Okay, Halliburton. Okay, Halliburton here this morning. No indication on where it's going to open. You can see it's bidding pre-market about 14 cents below its close yesterday, and it's asking about 38 cents above its close yesterday. There's no real trading activity going on. There was one small order that popped in that went in for 49.18. So on some broker platforms, you're seeing that, but there's no indication that Halliburton's going to open down in that area. Again, Halliburton, like we talked about yesterday, if it breaks 49, we're out. We're not going to mess with it. In fact, we have the sell order pretty much ready to react to if that happens and breaks 49, and we aren't going to ride that anymore. Simply because a break of 49 here on Halliburton, if we break down below 49, chances are we're going to 48. Very strong chances we're going to 48. We don't want to ride it down there. We'll take off our money and look to another entry that will get our money back or progressing quicker and sooner there. Okay. All right. Most questions that I've had. EMC here again. Also, no real earnings indicate or no real pre-market indication. Came off its lows a little bit at the close, but again, 23.50, 23.40 is that support zone, that 10-cent support buffer. We start to break 23.40. We're not going to wait till the close. We start to break 23.40. We're going to move on out on that. Later today, we'll be getting on and setting up some contingent orders that we'll play around the Fed, not for the challenge, but to just kind of show you how those work. As questions have come in on that, but we will be doing that as before the Fed here, probably around noon Eastern time here today. Apple. Okay, Apple here. Apple is set. Well, let's go take a look. It's been moving pretty much. It's been moving quite a bit here pre-market. Let me pull it up here so you can see it. Apple here, you can see that this morning, falling off all the way down to 544. It's at 549 right now after being at 553 just a moment ago. Apple is dealing with a lot of different things here this morning. One thing they're dealing with is the China Mobile announcement didn't happen, and China Mobile did not give any indication of when they were going to make an announcement that they were going to be ready to sell iPhones in China. So that's one hit. The other hit is from JBL, Jabal Circuit. They make components for Apple. It's estimated that about 18 to 20% of JBL's business is for Apple. It was for the lower cost version of the iPhone 5, the iPhone 5C, that they were producing for. So whether it's a big hit for Apple or not, can be argued, but it is one of the things that is weighing on Apple here this morning. Take a look, though. JBL announced their earnings yesterday afternoon, and the stock fell from basically $20 down to 17. Did JBL, right? Take a look at Apple. Get the ticker right here for you. Take a look at Apple on the JBL earnings. Okay, basically from the market close yesterday, Apple did not fall on the JBL earnings. So while it's kind of popular out there in the news media to write Apple's down because of JBL, there was really no real correlation there between JBL falling and Apple falling. Apple actually kind of stayed very flat during the JBL fall. Apple started to fall this morning as the CHL or the China Mobile announcement was never made. Okay, is this a buy opportunity for Apple? Well, J.P. Morgan came out this morning, upgraded Apple, put a 615 price target on them. So another upgrade for Apple. The move down here this morning does a couple things for Apple from a technical standpoint. I basically took it down to the middle Bollinger Band of 548. Kind of broke that, snap it back above. For me, as far as Apple, it's still the same as it was yesterday. We're still bleeding. We're still lower. We're still trading below the 7. If we get some sort of reversal on Apple today where it ends up $5-6, it won't be too late to get into Apple. And so I'd rather wait for that reversal, for that move back above the 7-day moving average, for that confirmation move to jump in rather than say, well, it's down $5 this morning, should I go after it? Simply because when Apple starts to go, it's probably going to go for a matter of 2 to 3 weeks and rally nicely into the year end. But as long as it keeps bleeding, there's no real reason to kind of jump at it right here, right now. FedEx reported earnings. Okay, FedEx reported earnings, and there's a slight miss on the top line number here. But they came out, they defended it with stock buyback. They announced how much they had already been buying back, that they'll continue to buy back until June. They announced that they would make a decision on the dividend here in June. Some of the shipping numbers were actually pretty good. So if we look here at FedEx, the initial reaction's lower, but really it's been coming back all morning. It is set to open up slightly lower overall, but not an earnings report that I look at and say, oh, this is bearish or there's trouble here for FedEx. One that we can look at and say, ouch, is Ford. And Ford didn't have earnings, but they came out and gave a lot of their projections and updated a lot of their earnings projections, sales projections, not only for North America, but for Europe and the rest of the world. And you can kind of see what that did to Ford here. It took it from about 1680, 1670 this morning, all the way down to 1583. Little bit of a relief rally right here. This is not really good news for Ford, as the estimates that they released are significantly lower than what many of the analysts had expected. And also, what are they doing? They're doing this a couple days after basically they came out with some good news and kind of gave everyone the expectation that everything was rosy and building. Now they come out with some of the negative news, and that's going to weigh here on Ford significantly here today. Yeah, Cricket. Thanks. Yeah, Fuel Cell FCEL beat up much on earnings. Yeah, it's a low vol or excuse me a low price stock here. You know, kind of a lottery ticket, can be fun to play for those of you that like some of the penny stocks. LinkedIn. Okay, LinkedIn here. We got out the other day, continued lower yesterday. It's lower in the pre-market here. Last I looked, let me go just double check and verify that. Yeah, lower down to about 217 here, lower on LinkedIn. So not really a great a great bullish entry here. We'll kind of see where that comes, but all signs kind of point to it coming back down towards the lower Bollinger Band, down towards the 210 area here. All right, so market opens up here. We're looking here. EMC kind of opening up right in support. HAL opening up down about 20 cents here on the open. Okay. Getting close down to this 49 area. Again, first couple minutes, not real indicative. We saw both HAL and EMC open up this much yesterday and kind of reverse lower. So, again, if we see HAL start to break 49 here this morning, we will hop out of that. Again, kind of looking kind of across the board, what you'll kind of see is most stuff is relatively flat. There's not a whole lot of movement in most things. Okay, relative to what we can see on other days. We do have Lennar came out with fantastic earnings here this morning. Very nice surge higher, about 4% higher. I know some of you are in Beazer homes, and the Lennar earnings are helping Beazer as well. And so, we're getting some pretty good housing data, some pretty good home builder earnings, even in this kind of rising interest rate environment. And that kind of puts a little bit of worry in some of the thesis of the bears out there in regards to housing. Okay. Yeah, MEG. MEG here. Take a look. MEG Media General. This is very much like something like a Micron, like something like some of these other high flyers that we've been seeing. They kind of continue to run like the Facebook, continue to kind of push above the 7 and trade in between the upper band and the 7. It's significantly overbought. It could pull back at any time, but at the same time, it just keeps on running. And so something like this, you just kind of have to say, hey, where's your risk tolerance? Where do you want to be out if it does kind of pull back there? Yeah, Vegas. Great comment. Lennar's killing it in Vegas. Yeah, and in the Vegas housing market is one of the fastest growing housing markets that are out there right now. Obviously, Vegas took one of the biggest hits during the collapse, but it is one of the fastest growing out there, and Lennar has a strong footprint there in Vegas. Micron. This morning it was announced, we've talked with Micron that Micron and Hynix are linked. Hynix is kind of the Korean manufacturer of DRAM. Hynix announced that they were going to build a new facility to up DRAM production. Why would that hurt Micron? Well, because if Hynix is going to increase production of DRAM, obviously more DRAM supply out there, DRAM prices fall. That hurts Micron, in the process. So Micron reacting negatively to that news out of Hynix, HIN, or excuse me. I'm sorry, the ticker symbol just slipped my mind for Hynix. I will pull that up, but Hynix is obviously going to be a little more of the beneficiary there. Apple here down here around 550. Okay, sitting here at about 550. And I have a couple emails in my email that I'm looking at, and asking about being a buyer here of Apple, and it's just still a little tough to be a buyer of Apple right here. Could you day trade it, get a reaction high, reaction low? Yeah, absolutely, but still trading below the 7, still kind of pulling back. It's getting into the retracement zone. It could start to bounce anytime, but I want to wait for that bounce to get in. Yeah, LinkedIn, look out below. Yeah, LinkedIn's tumbling. Hit that 210 mark this morning, getting a little bit of a bounce. Nothing really that I think is worth messing with right here on LinkedIn. I'm going to go in here and I'm going to pull off Halliburton. Okay, we're gonna cash out of Halliburton here. Looks like about 90 cents here on the option. So as it's breaking 49, let's see here. We're kind of holding 49 just a little bit. I'm gonna just kind of, but you'll notice I have the order ready in here. Okay. The bid on Halliburton's 90. The ask is about 93. Not pulling the trigger just yet, but we're getting close to that point where I'm not going to want to mess with it anymore. Uh, just real quick from a chart standpoint, this is kind of what it looks like here on Halliburton. Okay, you see it down here at this 49 support area. Um, where all the volume started to come in prior. Really would like to see it hold 49. If it can hold 49, everything's still pretty good, for the position overall. But breaking 49, the chances, it doesn't have to go to 48, but the chances of it moving down into the 48 area grow. And I just don't want to be kind of stuck with it there. Down around 48 and waiting and waiting and waiting for it to come back here. Okay. So Halliburton, it briefly struck below 49. Kind of snapped back just a little bit here. Snap down to 48.86, snap it back a little bit. Normal Halliburton volatility. So we'll continue to kind of give it here. If it's going to bounce for us, we'll ride that. We still have a little bit of a cushion. So yesterday we went and set up a bunch of straddles. Facebook, SPY, the SPY, Twitter. We talked about how these straddles were pretty expensive, probably not worth doing ahead of the Fed, but they are here in this paper account. You'll see kind of some of the losses on them yesterday. Much of those losses just simply due to the spreads, not because everything moved. We'll kind of start to see them move here today, and we'll be able to talk about them. Okay. Yeah, AK. Yeah, I agree. 48.82 is last ditch support. Yeah. Yeah. I mean, it's a question. Okay, is Halliburton going to have that kind of downside reaction and snap back? Halliburton, 49, there's nothing magical about that actual number. It's just at one point with the trade, you kind of have to put a line in the sand. And so, 49 was kind of where it went down to yesterday and snapped back. We said, hey, that's kind of our line in the sand. So far, it's bouncing off of there. We're okay. Initially here. EMC down in our support area, 30, 23.40, 23.50. We will set a stop on this ahead of the Fed here today. Breaks 23.40. We're not going to mess with it at all there with EMC. We'll lick our wounds. We'll take our loss, and we'll still be in a good position for the challenge to set up a nice trade into the close after some of the triggers that we see for many stocks that tend to set up after the Fed. Okay. Yeah, Robert, the refiners. Okay, the refiners. Tesoro. Okay, Tesoro here, absolutely. Looks like it's trying to finish a flag and pennant pattern, right? Or the pennant part, the flag part here, and looking to break up. Anything that kind of trades on Tesoro that starts to put it up above 58.5 is a really strong buy here on Tesoro. You have kind of Western Refining that's actually been outperforming Tesoro, has a similar pattern, but outperforming Tesoro. WNR starts to break above 40 would be fantastic for that Valero, which has also been outperforming. This is starting to kind of threaten a new 52-week high as well. By the close today, we see Tesoro kind of breaking up. We see Valero, we see Western Refining, all kind of breaking their consolidations. Be a fantastic trade to jump on for the challenge here. Okay. Alrighty, let's take a look here. EMC breaking below the 2340 area. I'm gonna go and pull off EMC here as that's breaking resistance. Let me take a look at the spreads here. We got about a 4-cent spread. Let's go put about a 75-cent order in there and see if we kind of get that filled here. No, so I'm just gonna go throw a market order here for 74 so we can get the trade out. You'll probably be able to get it for 75 on that, but we're out of EMC at 74. So about 20-cent hit on the option, which is about what we had looked at as worst case scenario if we didn't get, a bullish follow through on EMC. Would probably cost us about 20 cents there, and that's what it did. And so we're out of EMC. The nice thing with that frees up some cash for us that we can pile into something like a Tesoro or a Valero here after the Fed. With EMC, you can kind of see it here breaking our stop area, the 2340 area, breaking below yesterday's lows. We had the bear trap here. Okay, the bear trap, really nice volume on the surge up. These, especially here this year, have had a lot of follow through to the upside. Have not gotten that on EMC, so we had a great setup, breaking down, pulling it off, and live to fight another day on there. Take a small loss there on EMC. Okay. So just verifying the email went out. Okay. Okay, we're still in Halliburton. Okay, we're still in Halliburton. Okay, we're still Halliburton's holding the 49 level here. So far here this morning, it'd be real nice to see this above, out of the after the Fed here, or be pre-Fed, trade up in the 49.40 area on Hal. But regardless, we will be putting a stop on Hal there. But we're still in Hal, okay? Still in Hal, out of EMC with about a 300 loss. So a small loss there on EMC. Okay. So basically, that leaves us here with Hal and a bunch of cash, and ready to kind of look for a new setup. We will not make that trade or get in anything until the close here today. We'll let kind of the Fed play out and let things set up there. Overall, there's some interesting things that are setting up. For me, one of the most interesting, outside some of the refiners there. Okay, is are these banks? Take a look at Goldman Sachs. Goldman Sachs has found resistance up here, about 170. and overall kind of breaking it just a little bit every time this year. Now breaking it on kind of a trend rider bull signal, to go up to 180 there for Goldman Sachs looks quite promising. Bank of America, this one's very much like Apple, right? Very bullish from a fundamental standpoint. Had a real nice run, has been pulling back. Still a little early for entry. Still a little early for entry. We'll kind of see what the Fed reaction is, but we get kind of a nice little move up into the 1540 area. Bank of America would be a very nice buy opportunity. Buy opportunity there. Okay. All right, so we're out of EMC. Okay, we took what about a? I'm not sure the exact number. Somewhere between a $250 $300 loss on EMC there, which is what we had projected if the trade didn't work. So we took a small loss on that, and we had we had a very nice reward potential, very small risk. Unfortunately, the risk hit us. Halliburton here, we're still in Halliburton, holding it as long as it holds on to 49 there. Okay, the VIX. Okay, and thank you, Wick. The VIX here ahead of the Fed. These options are not really that expensive ahead of the Fed. And you can kind of look at it in one way or the other. You can say, well, the fact that the options are cheap means that the market doesn't expect a big sell-off post-Fed, and we actually have a good rally shot. You can also look at them and say they're cheap. Ooh, that's real cheap protection. Let me pile into some VIX to protect any upside trades that you may have on the board there. So you can kind of look at it one way or the other. Bottom line is the VIX is not very expensive. There's not a whole lot of premium built in. You can even come into something like a January 13 call. You can pick this up for almost fair value. And if the market reacts to the Fed this afternoon and starts to fall, you could see this 240 option here on the January VIX. You could see this thing go up to $5, $7, $8, depending on what the VIX does there. Okay. I'm going to just go into the paper account here, and I'm just going to go put that on just so we know to come back and take a look at that. Okay, and let's just go and I'm just going to go and buy here a January 14 call on the VIX. Okay, again, this is paper. I'm just doing this so that we can go back and compare the prices post Fed here for those that want to see that here with the VIX. So just bought a few January 14 calls on the VIX in that paper account. Okay. Yeah, Richard, Morgan Stanley. Morgan Stanley kind of in the banks there with, with JP Morgan. Morgan Stanley kind of came down to that area we talked about yesterday. It's right on the kind of the stop area after the bull signal from last week. Do you hold it? Do you not? If you hold it and it weakens in the morning, you got to be out. But Morgan Stanley has had some nice strength here. This is one where if I were holding it here ahead of the Fed, I would basically come in, I'd put a stop at 30.40 and say, okay, I'm going to hold it through the Fed and kind of just leave it as be. Okay. Overall, from an hourly perspective, this is a nice bounce for Morgan Stanley. It doesn't have to hold that, but it is a nice bounce there. Okay. Yeah, Halliburton breaking below 49 right here. Okay. Let's kind of back at its day's low here. It's not really wanting to have any follow through buy. You'll notice where the option prices are. They're kind of right about where they were here, the 91.92 overall. Okay, so not pulling the trigger on it yet. We're still sitting down here. Not pulling the trigger on it yet, but obviously don't want to let it get away from this level here. for Halliburton. Yeah, this would set us, I think, in my estimation here, somewhere around 2,300 that were left on the challenge. So, with the EMC and Halliburton, we took about a $700 hit, a little bit more than what we had originally planned with them. All right, popped out of the Halliburton at 90 cents here. Okay, and we're out. So we're in cash here. Okay, popped out of Halliburton in 90 cents. We're in cash here. Okay, um, out of Hal at 0.90. Okay, so we're in cash. I'll get that cash number. We should be somewhere around 2,300. So we've been flexing in this challenge between 1,800 and 4,000, kind of going back and forth between those two numbers. We're around 2,300, so we have some work to do. We need the next trade obviously needs to be a fantastic setup. The setup on Hal, the setup on EMC were very nice and strong setups. Were we victimized by the Fed? Probably not. They were just trades that started to go the other way, hit our stops, and time to move on, and go somewhere else or live to fight another day here. Am I bearish on Hal? Would I buy puts on it? No. Absolutely not. Do I still expect it to potentially bounce here? Yes, I do. I think there's a good chance we actually see Hal actually end up maybe even a buck here today. I think that potential is there. But at the same time, the risk now has grown. To go to 48. And basically, if we get stuck into Hal for a week or two, it'll basically kind of kill our potential, our earnings potential for the challenge, and so we don't want to be in that position here. Okay. Yeah, Kihu. Let's take a look here. Kihu. Okay, before I go on, I got an email here. Yes, I mean I can't argue if you want to stay into Hal. If you want to stay into Hal, you want to stay into EMC. I'm not going to argue that. I do think there are still some good potential there, but overall, it's not in a position right here where the risk it being in it right here has just grown to a point where it would hurt the challenge if we get stuck in those, if they get hurt post Fed. So I would much rather just kind of wait for the next trade setup that will be post Fed. Now we have no real Fed risk here, and so that's kind of how we're going to go at it here. EMC continues to fall here. Halliburton still kind of finds support here around the 49 area. Nucor short. Yeah, Nucor here. Really troubling price action yesterday. Dropped and then filled and now being a little bit weak here. I don't think it's something that you can be really aggressive short on, meaning, maybe you get it down to 50, 49 and a half. Okay. But overall, it's something that with the Fed could have a quick snapback. AKS is kind of bucking what Nucor and some of the other steel stocks are doing as it kind of continues to climb higher and to climb higher and to climb higher here on that. All right, let's take a look. What other chats am I missing here? Yeah, Cricket. No, in the House of Pain for a while if you stay. Yeah, absolutely, absolutely. Okay, okay, absolutely. Here, I'll do a quick calculation here for the challenge value. Give me 1 second here. Uh, Sorry, I'll have to go to my other screen real quick. Yeah, Kihu breaking down. Had that small bounce yesterday. Now breaking down here on Kihu. Give me 1 second here. Get those numbers for you. So Halliburton down 640, EMC down 286, so about a $930 loss. So that puts us about 2100. Okay, because we were at 3070, so that puts us down to about 2100 again. Whatever broker commissions not included, we don't include those just because for everybody we know that's variable. Okay. Okay, so about 2,100. Yeah, Jay Wood, why'd you get rid of the status bar that said how much money you have left in the challenge? Yeah, that's a bar that is coming back. They are putting that back. When we launched the new site, some of the format stuff because of the way all the data was automated, some of the stuff was just programmed differently, so they're slowly getting some of those things back. The spreadsheet and that status bar there will be back there. Okay. Yeah, Jake, I get about the same thing. Yep, about the same thing. So that leaves us about 2,100. So I mean, yes, does it stink? Obviously, does it? I don't want to make light of that. Any loss is just. Ugh. But at the same time, we're not out of the game. We're not in a position where we have a major catastrophe or major threat. But the next trade is obviously going to be very important. We will make that probably post Fed here today. We get a nice setup and some nice confirmation. I do have some favorites that I'm looking at overall that I would like to go after. We will talk about those as the day progresses, but from a challenge standpoint, we are what we have one, two, three, four, five, six trades that have gone against us. Seven trades that have gone against us, two that have gone for us. We're sitting with about a $900 loss. I'll take it. Obviously, it'd be nicer to be seven up and two down, and whatnot there. Okay. Yeah, with the MC Vegas, yeah, EMC here. The danger here on EMC is free fall. It's the danger when it broke the 2340. That free fall danger was still there. If I weren't out right now, I'd be popping out. Okay, I'd be popping out. The VIX call that I bought on the paper account. Let me go to that here. Again, this is just paper. The January 14. Okay, January 14. January 14. Yeah, PW. Yeah, sometimes the prices don't get the same. I always like it when you guys get better prices than I do. And so far for this challenge, most of the time, after I've gotten in, the prices have either gotten cheaper or gotten out. The price have gotten better. EMC wasn't that case. It generally, we found it averages out, but yeah, they're obviously with how fast options move. There's not a whole lot we can do about that. Now, it's one of the reasons we try to make most of our trades in the afternoon is because the prices are much more stable. In the morning, they're a lot more active. They're lot more fluctuating there in regards to price. Okay. All right, so today we'll kind of keep the January's Jimmy on the VIX. Yeah, the January's on the VIX. Okay, and again, those will just pretty much go up if the market falls off a cliff. Overall, so we have some in this paper account some of these straddles that we set up on Facebook, the SPY and Twitter to kind of show how the straddles will only work if we get a huge move. Then we set up a VIX so we can see that. Here at noon Eastern today, I will be on. We're going to talk about contingent orders and set up some contingent orders out there for the Fed. okay, for the Fed there. Show you kind of how to do that, so you can kind of set some auto trades up, and we'll set a few of those up. Obviously, not for the challenge, but just from a learning standpoint. Yeah, Apple here continuing lower. Okay, look, is Apple at a potential buy point here? Sure. We can make some buy arguments here. Absolutely, we have a CCI that's well below minus 200 in a severe oversold position. We have an RSI in an oversold position. We are now finally back into the retracement zone here. Okay, for Apple, we've talked about it's tough to be a buyer of Apple since it hasn't retraced yet. It's now retraced, right? Yeah, we can make arguments that this is a pretty good level to buy Apple. If I was back in my fund managing days, I would dip my toes in. I'd start buying a little bit. From an option standpoint, I would rather have a little more confirmation and start to see some sort of snapback come in, simply because coming back down here to 537, 535 is a legit possibility given the overall price action here. Okay. Yeah, Apple's at 545 right here. I think downside you still got 537, 535, kind of on the real low end. It may not get down there, but we're in the retracement. We start to see support build for Apple in this area, then we can definitely look to get in there. Okay. Yeah, Facebook and Twitter straddle starting to materialize. Okay. Okay. Yep. Yeah, Mel. No next trade. We're not. We're in all cash right now. About 2,100. We're in all cash. Okay. We're in all cash. Okay. Okay. We will look to get into the next trade into the close. Yeah, RM. That's the silver lining, right? Don't know about others, but I've never made 9 trades with 7 losers and only lost $900. Yeah, yeah. It's. I, I'm trying to choose my words properly here. Um, it's one of those things where the idea behind the challenge is that losing streaks, no matter how bad they get, the pain of them is nowhere near the gains that can be had on any small winning streak. But the losing streak that since the last challenge, last challenge didn't work, and then this challenge so far, 2 out of 9, it's been pretty brutal. In fact, you can flip a coin and probably have a better percentage. Why is it this way? I don't know. Have I gone through this long of a losing streak before? Not this long. Okay, not this long. I'm entering record territory. But you know, the positive side is you think about it this way. Eventually you're going to go on a streak where 7 out of 9 are winners. If we had 7 out of 9 are winners, we'd be sitting up over $10,000 right now. So 7 out of 9 losers, we're down $900. Where if they were 7 out of 9 winners, we'd be up $10,000. If would should, the reality is we're down 900. But the whole idea of the challenge and using options in this challenge format is that, hey, no matter how bad the trading is, you're still in a position where it's not going to blow you up. And still in a position where 2 good trades, you erase all your losses. And, unfortunately, we're proving the downside. I'm really ready to prove the upside. Absolutely ready to prove the upside. Okay. All right. Yeah, I mean, some of you have been with us for a while. You've ridden some of the ups and some of the downs and everything else, and look, trading is an art, not a science. No matter how good the setup, it can go your way. There's too many variables to take into account. Do the percentages average out over time? Sure. Absolutely, but that doesn't make the downside any easier, and frankly, it's not, and I don't want to sugarcoat it to make it that, oh, it is easy. The downside's never easy, but the upside, with just a couple in a row is there. I know some of you have kind of been doing your own challenges and have kind of seen that process and seen it build out. And am I confident we'll get there? We'll have another challenge that's smoking hot? Absolutely, absolutely. Will it happen this afternoon? We'll see. We can control what we can control there. Okay. Thanks, ARC and Jimmy. uh, Alrighty. Well, thanks for hopping on. We'll be on here, throughout the day here. We'll be back on at noon. We'll talk about some of these orders of setting up some of these, how to set up some contingent orders ahead of the Fed, and kind of look at that from an education standpoint. We won't enter another challenge trade until the close here today. We'll kind of look for the setups. We generally get real nice setups post Fed. We'll see kind of where that goes. We'll talk about. I'll be on video during the Fed. We'll talk about the Fed reaction and everything there. Any questions? Let us know. We'll talk to you later. Take care.